Hi there guys, welcome back to another video. In this one we're going to be breaking down another gold trade from last week. So very similar to the previous video we did on the gold trade breakdown. We did seem to get a very good response from that one, so hopefully you guys were able to take something from it. And we thought, why not do it again? It is a slightly different trade as well, so hopefully there'll be different aspects of the trade, that you're able to take again and incorporate yourselves. But before we do get into the trade breakdown, I do just want to say congratulations to Virin, who was the winner of the giveaway. That was announced yesterday. So he has now received his 3 months free subscription to the analysis group and also a 50% off discount code to use on the website. So again, very well done to Virin. Now, anybody else who did or even didn't enter, who did sort of miss out, then keep your eyes peeled. We are going to be doing more stuff like this in future. Both here on the YouTube channel and also on the Instagrams. So if you don't follow us both on Instagram, mine and Sam's Instagram will be in the description as always. And if you're not already subscribed to the YouTube, make sure you do subscribe. We do have another good sort of mini series coming to the YouTube channel very soon as well, so keep your eyes peeled for that one. But without further ado, we'll get into the trade breakdown anyway, and have a look at this particular trade. So again, this one, in comparison to the previous breakdown we did, this trade was based on the hourly time frame. Now the previous video, I know it was a slightly lower time frame, so it was based on a 15-minute time frame. So this was a slightly higher time frame. With this particular trade, again, you can see straight away we've got the confluences up on screen. So we had a 38 fib and a 200 EMA lineup. And if we just extend this box just to make it a little bit clearer to see when I can get hold of the side. Yeah, we have this particular level, key level on the chart. Can't get my words out. So you can see here we had a nice bit of resistance, and somewhat you could argue a double top here prior to this break, and then obviously it came back for the retest of this area. So this would have been a very nice position to take as well. Again, break retest of this area, but you can see straight away with the fact that it's retested it very nicely here. This area is clearly a strong level. So again, price has then pushed back up. It's failed to come back to test this level or even break this level for about a day and a half. So at that point, again, we had the 200 EMA lining up. We had the 38 fib. And when I did send it to the analysis group, I did actually have, you can see here, a potential trend line third touch. However, it didn't quite line up in time. Obviously, I did send the trade in just before 10 a.m. And it did then go ahead and trigger at just after 2 p.m. So I wasn't expecting it to trigger as soon as it did. However, we had the entry area 1848. I know the fib did line up slightly lower at 1847.3, give or take. But we do just like to put a slight buffer on the trades, more specifically as well for FTMO traders. Obviously, we know that the spreads aren't really the greatest with gold on FTMO, and often you can get missed by spreads. So again, it just ensures that we do get triggered into that position as well. And in this instance, the buffer worked perfectly. If we break down onto the 15-minute chart, because on the hourly it does look like the stop loss may have been hit here. However, if we go down to the 15-minute, you can see how fast this particular trade was. So obviously with that 15-minute trade from the previous video, because we did hold a runner and we managed to catch it from more or less a swing high, again, we were able to monitor that, leave that break even, and then let that run. With this particular trade, you can see here, we were actually triggered in with this wick. So you can see how fast the movement of that wick was and how fast the retracement was. So we were actually long from 1848. So it was a really clean entry on this particular trade. And we had a 40 pip stop loss. So we went with a 40 pip stops and again targeting 1-to-1. So we aimed for a 40 pip TP as well. And it was done in about 8 minutes. So if we, I'll be able to show you here actually, we sent the trade in again just before 10 a.m. This is how it was sent. We give the reasoning as to why we would be looking to take the trade, and you can see the zone was reached at 6 minutes past 2 in the afternoon, and again 8 minutes later we'd hit that 1-to-1 target, taken a partial and put the rest risk free. And again, from that point, within 8 minutes, there was no attachment to the trade, and we were at a point where we'd made money and we physically couldn't lose. Now, in this instance, again, slightly different to the previous breakdown we did, because this trade did then go on and do 1-to-1. It did do slightly more. It did actually do just shy of 650 pips. However, it did then reverse and actually come back down, tap us out at break even. However, if we didn't go break even and we did just keep to the original 40 pip stop loss, it would have, as you can see, come down and stopped us out. So we definitely made the right decision in terms of getting it risk free as soon as possible. And to be honest, that's the main aim. You never know what the market's going to do. And if you, as a trader, can put yourself in a position where you physically cannot lose and you've made money, you know, it's going to be hard for the market to win against you. So again, always try and put yourself in a position where you are risk-free, and the quicker you can do that, you know, the better you are. And at least for me personally, the easier it is to detach with emotions, etc. And again, you know, you're not always going to be able to catch a runner that goes and does a 1-to-10, 1-to-20, 1-to-30 risk to reward. You might get, depending on your data and the trades that you've been taken, you know, you may get, say, 1 in 6 that go on to do a 1-to-10, 1-to-20, 1-to-30 plus risk to reward. But that one trade will make up for the majority of, if not all of, and more of the trades, which then the remaining does reverse and tap you out break even. But regardless, you're still up for the day and you've still made money. So it's, again, don't be greedy. Take what you can and get out. Play it safe and stay consistent. But again, very, very simple trade in regards to that particular one there. Again, 38 fib. We had a nice key level, as we can see here, a nice key level here. And if we just go down to the hourly as well, just to make it a bit clearer to see. Again, we had the 200 EMA lining up as well. And we did enter just above the first confluence with a slight buffer, again, just to ensure we were triggered in, which we were. And it seemed to play out very well. So again, very quick trade breakdown for that one. Again, that was sent over to our community group as shown on screen there. So again, if you are interested in joining the team, as always, the link will be in the description. And if anyone's got any particular things they want us to go over, any video ideas, anything that they want us to cover or break down, drop it in the comments. We're always checking through them, and if you've got any ideas, we'll definitely consider a way that we can bring that to you. But again, thanks for watching, guys. Hopefully you were able to take some stuff from this trade breakdown at least, and we'll see you in the next one.